Greetings, members one and all of the Salivation Nation. Gold, silver, and this metal should be in your portfolio. Let's explore. Now notice I said portfolio. That's a fancy term indeed, because when most of us talk about the metals that we have, we're talking about the ones that are in our stacks. That's right, the ones that we can hold on to, the physical. And really, I'm not against that for this other metal as well. But if you look pretty closely at this image, you can probably tell what that other metal is. Yes, indeed, it is copper. And you can see it in a couple of different forms here. But before I get into exactly how you should hold this metal, I'm going to reference an article here from Kitco that talks about here that inflation is one of the key drivers why we should look into commodities in general. But really, gold will be an attractive hedge in a portfolio, not only in a stack, but also for those who care to put your money into the ETFs, exchange traded products out there. And those are mostly for those in the stock market, but I believe in holding the physical as a much better hedge, even though the problem with holding physical is you do pay a large premium, and but you know that you have something that is of value and will not just go away or disappear or be suspect for the kinds of things that you find in exchange traded products out there. But what does that mean necessarily? Because, those things have never really been hacked, but they're also not fully backed. As we know, most commodities that are traded in the stock market are not backed fully by the physical products. And that's just common knowledge. And that is a concern for many of us who enjoy the physical. But I know, and you've heard me talk about this before with some folks that I know very close at my workplace that are getting into gold and silver, mainly in the ETFs, because they don't really care to have the physical. And again, that's a foreign world for many of us. Copper and silver will also be an attractive asset to own, according to a research firm. In a recent interview with Kitco News, Robert Ryan, who's a key strategist at BCA Research, said that his firm is bullish on gold in the long term as the Federal Reserve looks to maintain its ultra-loose monetary policies in the face of rising inflation pressures. The Federal Reserve is walking a very thin line in dealing with inflation. Most of us understand that, and this is why we hold these metals, because we know that the Federal Reserve is not known for making the wisest of decisions in that regard. And these comments come as gold has been moving steadily higher, and we saw it recently push above $1,900 an ounce. In fact, if we see that price movement again, it bolsters the idea, provides a foundation for higher gold prices ahead. Many of us feel like that gold will probably reach $2,000 before the end of the year again, as it did last. The rally in gold comes as copper prices fall from their record highs we saw at the start of May. Silver is also seeing relatively weaker prices, weighing down by its industrial component. And that's the thing that people don't get about silver. The industrial side means it's a different animal. The duality of silver is something that needs to be reckoned with to fully understand its price movement, especially compared to gold, and why the ratio between gold to silver is at a frustrating 68-1 on average here. Ryan said that investors shouldn't dismiss these two metals. And that's right. And I'm definitely, that's a message that I've been saying, especially with regards to silver. But you've also heard me talk about copper more in the past year as well. And he said that he expects to see much higher prices through 2021 as demand remains strong. He's particularly bullish on copper, as the base metal will continue to see significant supply-demand imbalance that could last for years. Look at this. Think about what's going on in the world today, especially with EVs, electric vehicles. We talk about silver and how much silver is needed for these EVs. Well, there's exponentially more copper that's going to be utilized for those EVs than silver by a long shot. Now, it's very clear that copper is much more abundant than silver. Silver, I believe it's a precious metal, but at the very least, it's a semi-precious metal. And so therefore, it does have limited supply. And some people feel that, according to some data, that we have already reached peak silver production. But if not, we're probably coming very close to it, as many of the primary silver mines are drying up. And we're relying mostly silver as a byproduct of copper, nickel, lead, and other metals. And so that is something we have to take into account here as we look at the significant supply-demand imbalance that's talked about. It's going to take time to get mines up and running for those new discoveries that are out there. Ryan added that new political regimes and tax structures in critical mining jurisdictions like Chile, Peru, create even more obstacles for companies looking to build new products or expand brownfields. There's no easy solution to increase the supply of copper the world is demanding right now. It's in high demand because it is required within every sector for the global economy. That is paramount, even more so than silver. He said that they could see copper prices push above $5 a pound in the current environment. In other words, not a future environment, just as it stands right now. Prices have to get higher to bring more supply into the market. And that's what's going to drive supply, in a sense, is the demand, which is going to push these prices up to $5. Could we see it? I don't know, but it may not be a bad idea to have it in your portfolio. And we'll talk about what that means here. Not only do mining companies face massive capital costs when it comes to building new mines, but Ryan also noted that companies will now have to factor in higher costs when it comes to meeting their environmental social governance, ESG standards, red tape. Mining companies focus on improving their environmental footprint and social standing in society as consumers have set these high standards. Companies are taking very seriously these days because the world is watching. And they're being held accountable for their actions. So that means that, it's a lot tougher to get a mine up and running, or even to continue mining as regulations are more stringent these days. That's going to affect cost, and that means we might see higher prices for copper. Their stance in copper is one of the factors that supports their bullish gold forecast. He explains that faced with growing costs and rising demand, copper prices have to go higher, which will lead to higher inflation pressures. And inflation kind of works its way back around to not only premiums, but also spot price, the cost to take it out of the ground, and all of that. So there is those different scenarios we have to come into play here, and that's why, like copper and all commodities, probably are going to go up higher. When you have little dips in the prices that we've seen from time to time, I believe those are only temporary reprieves from the higher prices that are going to continue to climb up as the year goes on. And years, by the way. I believe that for all metals, all base metals and all precious metals. And that's something we have to certainly keep in mind here as we enjoy the view here of these copper and gold and silver coins here. Or, copper rounds, except for one copper coin. A lot of commodities, these face these some similar scenarios. We're going to have demand pull inflation higher, which is something we haven't seen in the last 20 years. In other words, it's going to exacerbate the situation. Higher prices, higher demand, and then inflation on top of that is a recipe for a more pronounced and bold prediction on where the price of these metals will be in due course. And so that means that it's probably a good idea to have copper in your portfolio as well as gold and silver. And what does that mean? The Federal Reserve is looking at actual inflation, not just models and forecasts. They're going to hold its stance until it sees actual evidence that inflation is more than transitory, and that is good for gold. And they've been predicting transitory inflation. That's the buzzword with the Federal Reserve. But that's something that's going to affect for quite some time. So holding these metals in a portfolio, as many of us stackers don't like to hear it, there are a growing number that don't care to have the bother of holding these physical metals. Unlike what you see here, most of us in this community do hold them, and we enjoy holding them. The copper rounds that you see here, they are what I bought just for fun quite a number of years ago. They're enjoyable. They're fun to look at, and they're pretty cool, but the premiums for them, just the mere cost of producing them, knowing that copper is priced by pound, it's going to be quite a number of decades, if not more, before I get my money back out of these. So it's not wise to hold the physical form of copper in this way, unless you just enjoy them and want to have subsidize your stack, essentially, in a sense, or companion pieces for collecting. The best way to hold copper in the physical is to get a form that you really can't melt down. It's against the law to melt these down, and that is Lincoln cents. That is the most cost effective because there is far more than a cent's worth of copper in these coins if they were minted in 1982 or earlier. And by the way, there were some Lincoln cents in 1982 that are copper-coated zinc. The way to tell the difference between the two, if you don't have the ear for the ping test, is to weigh them. The copper ones will weigh more. So that is the way to be able to hold copper in the physical form. The best way is Lincoln cents. In other words, you're going to do coin roll hunting or dig through your pocket change to get these, which is somewhat of a headache, somewhat impractical, but cost effective. And I'm starting to do that again too, to stack in that way. But that's in the physical form. And that is really not considered a portfolio. That's more considered a vault or a safe. But the best way to add that to your portfolio is, go on the commodities exchanges. Get invest in it on that side of the level, in the stock market. It's not something I really dabble in. But for those who are inclined in that area, and there are more and more stackers who do. There's more stackers that dabble into Bitcoin and cryptocurrencies, and they also dabble into stock trading and the ETFs. And there's nothing wrong with that. You can be both physical and digital and virtual at the same time. That's a diversification from within precious metals. And that is why it says in the portfolio in the title. If you're so inclined, that might be another way to diversify within the metal sector and commodities, reaching out into the commodities, because copper is not a precious metal, it is a base metal. But I encourage you, if you do add it to your portfolio, to get a little bit of copper. And the best way, again, is in this method here, to grab some Lincoln cents. Save your pennies, that's right. And technically it's not a penny, it's a cent. And that will definitely help to further diversify yourself in that arena. But there's nothing wrong with a portfolio. It's a way to diversify yourself, and it's something to take into account. And copper is just one of other commodities that have been skyrocketing here as of late. And so therefore, it is definitely a sage advice, I think. Yea, though I'm not a financial advisor, I do have a crystal ball, and I'll show that crystal ball in a subsequent video in due course. But I believe in the power of diversification and the power of metal. That's right, heavy metal. And I like the physical, but there's nothing wrong with a little ETFs from time and time again. So those of you who are inclined, that might be something to consider as a way to be able to further diversify and, most importantly, protect yourself. It's about protection, folks. And copper has kind of shining as of late, and I think it will continue very much. Other than iron, I think it's probably the most abundantly used metal out there. Certainly aluminum as well. Silver is very diverse, but copper is just utilized like crazy. And of course, we know gold is the stablest of these metals. It is mainly as a precious metal, so it is something that we will continue to hold in that regard, because we know that it protects us from times of economic instability, and central banks hold the stuff. It is because this is treasured as to why it has value, and it has for millennia. And it will continue to do that in this case. So there you go. Let me know what your thoughts are on this video and this topic. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.